Hello and welcome back. January 29th update. This is Saturday. We're updating for last week. Not much has happened last week in my portfolio. There's been a couple of up days and one down day. Overall, I finished the week flat. If you look at the returns for S&P 500, the S&P did a sum of 0.8%, and I did about 0.01. I stayed completely flat, not up, not down. It's pretty much where the market's been so volatile lately, up and down. There's been days where it's gone up 4%. There have been days where it's gone down over a percent. In markets like this, you don't really know the direction. And since I am long, net long, as you can tell, my net long exposure here is $5,798. My short exposure is 44.20, which makes me net long. In down markets, which the S&P has been over the last month or so, it's been a downward slider. Net long portfolios tend to suffer or tend to not do so well. In my case, I ended up being flat. How did I end up being flat and not lose 10% like the S&P 5? Well, actually, it lost 7% because on the last day it regained 2.4. There was a drawdown of about 10% on the S&P 500. The line that you see down here, this is my bear market. That's a 20% retractment from the highest point of the last business cycle, which would be right about here. That point is actually like 4,800. Where the bear market kicks in and we should start taking our shorts is 38.37. Now, according to the fundamentals, the S&P 500 is almost down for the month. If not for the solid recovery, it would be. It's actually, numbers speaking, it's actually going to be up for the month as a result. But I am predicting a decrease in the GDP. I'm not seeing an increase. There's a bigger than ever supply chain issue. As we all know, the quantitative easing has ended. They're not printing any more money. The Fed now is talking about raising rates, which is not good for the stock markets. But that seems to be all priced in already because throughout this period here, the market's been expecting the Fed to raise the rates. They've been talking about that ever since the beginning of the year. So I believe we may have reached the market bottom yesterday. It bounced nicely, 2.5% there. And I've actually taken some positions, net long positions. I don't have a short for this one yet, but as we discussed in the previous video, Abbott. Abbott is something I'm currently holding a position in, and I bought an option. I've also added BWA, Bind, which is Borgwarner and Beyond Meat. That's a new addition. We're going to go through that. But the most exciting one here is the one that I talked about last week that I might be able to take a nice position in the Abbott as I've seen the turnaround story on that one. And I think I picked the bottom on this one. If I didn't, I'll get left with sticky fingers, or sorry, smelly fingers. But so far, so good. I am liking what I'm seeing. I've added a couple of measures here. You can see that a different portion of the chart has been entered here. This is whenever you're entering option trade, this is where we're going to be using this section right here. This is my option section. And so pretty much I'm net long on my option. I do not have a short on it. I am going long and short the same stock with an option. The reason I do that is I want to hedge out any risk of drawdowns. It works the same as going the longest stock and shortest stock. What this does, however, is it takes out the time decay of an option. As you know or may not know, an option gets cheaper and cheaper or loses its value the closer you get to the expiry. So we do not want to, this actually has an expiry of March 18th. Uh, okay, well, why don't we go to March 18th. And you'll notice that this will populate days left. Oh, that's not working so well. H2 minus today. It's giving me a date, so I'm just gonna go with a number. And let's do that for both of these. That's just a quick number. I do not want decimal places because that's the number of days. And this now shows me the amount of days left on this option. So I have 48 more days before this option expires. Now, I will be taking a short position in this, just as I would in any long and short position in an option scenario. The reason being is that I want to hedge out any market risk. So if there was a major stock market crash all of a sudden, I want to be like one of these trades here. I don't want to be exposed only to the upside where I'm going to end up losing 7.5%. I want to have some insurance in terms of in form of a short on a different stock, and that would be a long put and a short put. It has to be a long and a short at the same time, just in the opposite direction. So on this, I will be buying and selling a put. I'm not necessarily going with Lulu. I'm actually looking into Rivian for that. I've had some really good success with that, and I'm thinking of adding to it. I don't see this company doing any better anytime soon, and I might be taking a position. If I had done that at 74, I'd be currently sitting at almost $2,000 with this one. But taking options is something I want to do when the volatility in the market is a little bit higher. Right now, volatility, if we look at the VIX, is it was at 30, now it's retreated about 27.66. This reflects the rise in the stock market. This reflects this fall in the stock market. It's just an inverse of it. But anytime it's above 25, I want to start taking a little bit more volatility trades. The market moves more, and at the same time, I can make a lot more money that way. But the volatility, first of all, needs to be there. So back to our Abbott call. Um, I've taken one option. I entered at $4.56. That's just one contract. Currently, the price for that is at 4.95, so I'm sitting at a nice profit of 54.40. I've also taken a short at 150 strike, and I should probably enter that somewhere in here so that we can see what's actually going on. I keep on updating this chart, making it better and better as I see what's going on. But what I'm missing here is the actual strike of long and a short. So this one happens to be a 125, and this one happens to be a 150. Next time we come back for the next week, I'll have this redesigned a little bit so that reflects that here. It's not showing it right now, but that's going to change. I realized I haven't been using this much. I've been focusing on a long and short portfolio, stocks only. I haven't really been working on the option side. But since I am taking some options trades, you'll see this area start populating a little bit. What I've added here is a calculation. So sometimes the broker doesn't give you like the final price, which is going to be the price now, and you don't know what you're actually sitting in. What you can do is you can go to Yahoo Finance, you can go to CBOE, you can go to many different websites that publish the option information, and just enter the bid price and the ask price. And let's say the bid price was 55 and then the ask price was 90. What this will give you is this will give you the median price. The most the most, sorry, not profitable, the most likely number for you to get filled at. So when you're trying to buy or sell something, you're not going to go and sell it at the ask and buy it at the 55. That's just not, nobody's going to buy that from you or sell it for you. What you need to do is find the number in between the two and pitch that to them, and more than likely you're going to get filled in. That's your most likely scenario for actually getting filled in and that taking that trade. Um, so right now, like I said, this is only like 1 hour old. I bought this at the end of the day on Friday, and it right away produced 54.40 because there was a nice rally towards the end of the day where if you look at Abbott, it rallied a little bit towards the end of the day. Let's actually pull up a chart so I can show you that. I'm going to go to Yahoo Finance. I'm going to bring this down. I'm on a different screen here, but I'll bring it down so that everybody can see what I'm looking at. Here's my Yahoo Finance. Let's make sure that's in the big screen. So if you look at the day, it's been a nice up day. I've been talking about this ever since it was at 219. Kind of regret not getting in there at that time. But what I was looking for is I was looking for that pullback. And so Friday's pullback was 4.808%. If you look at the last 5 days, and it rallied very nicely towards the end of the day. So what I'm anticipating, first of all, on Monday is this opening up at like, I would love to see it at about 30. Hey, I'd love to see it at 150, at which point in time I'm no longer losing anymore. Sorry, I can't gain anymore. By taking a long and a short option position, I've actually capped my maximum at about $2,052 with this current option, and the most I can lose is 448 bucks. So that's 4.5 to 1 scenario. Anything at 3 to 1, I'm already happy with. So if I see a return above 1,500, I will more than likely close this trade, and that's going to be the best trade for the year so far. And you're going to see me taking more and more options, but that coincides with the volatility. Volatility needs to be there, otherwise it becomes just one of those stocks that doesn't go anywhere. And what's the point, right? You want explosive growth. You want to just be pop and then take that option and make a couple of grand. But the volatility, first of all, needs to be there. If there's no volatility, the best way is to stay flat, long, short portfolio, and definitely don't day trade. It's going to be a long game. With this Abbott, this could be like a 2 or 3 day trade, and I could be done with it in no time. And so far, it's just like 1 hour old, essentially. Not even an hour. It's like 45 minutes. I took this right at the end of the day, and it seems to be working out so far. If it doesn't, it doesn't. All I can lose really is $448 on this trade. The maximum I can win is over 2,000, which is 4.5 times more, which is great. That's a great return. I believe this will do. And I know Abbott is a great company. They publish information all the time. If we go back to, let's just look at the link here. I have the link under Abbott. This is a very communicative company. They care about their investors. They publish information on a regular basis. If you go to their newsroom, obviously they have something for investors, so you can look at all the information. Let's look at the news and events first. Let's see what that's all about. And you'll notice that they keep on publishing information all the time. Their earnings conference calls, actually, you can look it up right here and see exactly what's going on in the earnings. The earnings were outdone. It came in higher than the consensus, which is good, obviously. I believe that's a little priced in already, but the price and the rally at the end of the day, the confirmation as the numbers came out, that's directly linked to this. It's going to rally for a little bit. I'm anticipating 130 moving on from here. And if it does higher, then go Abbott. I've been looking at it. I'm pretty sure I've picked the bottom on this one. Technically speaking, even the indicators are lining up. It's bouncing nicely off the 250-day average, just like the S&P 500. The Powell speech last week, or this week, sorry, has kind of put an ease to everything. We're not expecting any interest raises until March. The yields have started rising, so we have a steepening of the curve there. Once again, the quantitative easing is ended, but that's all priced in already. This 10% correction in the S&P 500 is pretty much what priced that in. So what's next? Next, we're going to go back to the portfolio manager, and we're going to go over this one here. This is something I also spoke about last week, and I'll show you exactly what I mean by when you're doing trading long and short, what it does. Because my Berg Warner ended up losing 4.6% last week, but my Beyond Meat ended up making 8.45. So just because one thing is not working out for you and it starts to lose money right off the bat, having that short and being prepared for the inevitable market corrections, which happen all the time, protects you from any big drawdowns as you trade this. And same goes for the Abbott call. And as you notice, I currently do not have a short. I'm not populating this anymore because we're playing with options at this point in time on this trade here. I don't need the price data. I'm actually feeding it from here. There's no point in feeding the same data twice onto the same chart. It just makes everything slower. So I'm getting this price data from my actual stock trade or equities trade here. And even though Abbott's been down quite a bit, the short offset that. And, it's currently because Abbott is, I have so many more shares of it and I only have one share of Lulu. I'm still in a negative of it, but it's not like $100, $200. I'm losing $20.48, and this number is getting smaller and smaller. And it's going to start growing into the positive the more Abbott turns around. Abbott's not a stock that's going to fall. Abbott's numbers are great. Let's just quickly go through those again just to show you for anybody that's lost or hasn't seen the previous of this. I will show you what I mean. Let me just find my microtrends. I'm going to go to macro trends. This is actually a very good website for finding information. I highly recommend it. I use it primarily for my financials. And so we're going to type in ABT. That's Abbott. I'm looking for their income statement. And if you look at their income statement, their revenue is constantly climbing, cost of goods sold is going up with any growing business that will be, but the gross profit is constantly growing. Like it's 2020 where a lot of companies have been killed or whatever. They've actually just growth, right? One of the biggest numbers that I look at is the EBITDA here, and that is also constantly growing over the time. Well, in 2010 and in 2011, there was a little bit of a drop, but ever since then, it's a nice steady growth. Earnings per share keep growing. This is a good company. This is not something that's gonna fall anytime soon. What these guys do is they manufacture these rapid tests that everybody's after right now. So right now is when they're making their money because they're one of the primary suppliers of these rapid tests being distributed all over the United States and I'm pretty sure in Canada as well. So this is a company that's going to do well right now. The catalyst behind it all is obviously the big one that's been around for the last 2 years, and I've been dealing with for the last 2 weeks. It's not that bad. It's a freaking FLU, and yeah, the whole family had it. Everybody's fine. I've had hangovers which were worse. Long story short. Anywho, so let's go back to the previous page here, and let's go back to my BWA bind. We're currently at 4.2% return, and yeah, it's looking good. It's looking really good. What I really want you to focus on this page is what's going on with the prices. We have Beyond Meat, which is obviously going down very nicely. That seems to be a very good trade here. And then we have one which we didn't do so well on, which is the Bergwarner. The price is so choppy, but it's been choppy like that. So I'm expecting a nice pullback on this one, which would make my ratio go up a lot quicker as a result. Now, just because it's going down, I'm not panicking. I've lost 4.6% on that. Like anybody that's long only would be crying at this point in time and wondering whether or not they should close it. I'm nowhere near that because I'm actually coming out positive. That is what happens when you have a nice long and a short portfolio setup. Mind you, my long is something that's doing well. Their financials are great. If I look at Beyond Meat, their financials are not that great. And let's just go back to um, where are we here? Oh, where are you? Here we are. So if I go back to Beyond Meat on this one, and we look at their income statement, remember Abbott, how nicely everything was growing. Sure, the revenues are going up, and gross profit, yes, it's going up. But then you look at their EBITDA, and you have to really look at all the numbers. There isn't really there isn't really anything that strikes me as something I would want to invest in. There's a lot of negatives here. This is not a profitable. Well, they are making some money, but like I said, a lot of companies this past year has made money because they've been given all this free money, essentially all these loans to prop up their business, literally interest free. And what they do, they buy back their stock and they pump their prices up. The investors are happy, the company's happy, everybody's making money, and then You pull a little pump and dump in the end and screw everybody. But what I don't like, first of all, is the choppiness of this. Okay, this is not growing. This is all over the place, and there's too many minuses for me to invest in or buy something like this. And so I'm shorting it. Plus, I don't believe in their product. It's a product that is supposed to replace meat. I'm a meat lover, and honestly, I don't see that happening. There's too many people that love meat, and yeah, it's a great idea. But when you're a company that tries to pitch that to restaurants that sell meat and have a clientele that eats meat on daily basis, and then you try to give them a veggie burger on the menu, they're just not interested. I'm sorry. Yeah, I'm sure it's a great tasting product, but for somebody that loves their meat, they're not just going to transfer over. Like, are you going to sell a veggie burger at a meat joint? No, you won't. And I don't see this company doing any well until they start advertising to somebody that only eats vegetables. They're trying to target the wrong audience with their product, and unless they improve that, I don't see this going up anytime soon. So there's that. Um, so let's go quickly back to the summary. This is self-explanatory. This is my long and short. Very excited about this Abbott call. I'm hoping for great things. I got 48 days until this expires. And yeah, I'm crossing my fingers on this one. This should be nice and by next week you are gonna see this part of it here filled in where I'm gonna actually come up with a short for this trade, and I'll have a long and short just like with anything else. Let's just quickly go through all my open trades. This week we have, it's gone up. It's gone up. There's been a correction down, but this was a losing trade. Currently, I'm sitting at 45 bucks with it. Like I said, when these things turn around, where my long picks the bottom, which is probably right here. I mean, nobody can pick bottoms that well, but from what I'm seeing, the current data is being all priced in already. This has been moved by the S&P or by the overall market. This is not something that all the companies. No, this is a stock which is part of the overall index, and it will move down with the index. Now, if a company has bad financials, overall, it's just going to keep on going down. And then as long as the company has good financials, overall, it's going to keep on going up. So that's exactly what I'm trying to represent here. Now, when you have a pullback of 10% in the S&P 500, both of these stocks are going to pull back. But that doesn't mean that you can't stay within profitability. If you look at the ratio here between the two, they're both going down, yet the ratio is slowly growing. How can that be? Well, the gap between the two keeps growing, and that's the only thing I'm interested in here. I'm not interested in one long and one short. If the market crashes and I'm only long, like I am currently on my Abbott call, I will end up losing almost 500 bucks on that trade. Now, if I have a short, I have a very good chance at recovering a lot of that, plus maybe making a huge profit. If you look at some of my trades from the summary, these are long and short equities only. So if you look at Bergwerner, I'm losing on that one. I started at 44.72. I'm currently at 42.66. And so that's a loss of what, $40 on that one? Minus $40. And then we look at the Beyond Meat. That has done 61 to 56. So right there, I'm looking at about $60 profit, right? We go back to that. Voila, there it is. And so that offsets, and I'm actually $20 in the plus. Now, if this was an option trade, which I was pondering whether or not to take, but I'm just going to ease into it nice and slow. We're going to go step by step. I'm actually going to show you exactly how I do this, why I take it. It's because the volatility is high. But also, what I found is that the option that I was looking at, it had a really good price. There was enough of a pullback for me to get in at a nice price, which if I end up losing it all, it doesn't really matter. It's just a part of the game. And on a 3-to-1, chances are, very large chances are, that I will make profit out of this. But let me show you the difference between the two anyways. How much would something like this be worth if I went a long call option on this? Right now, I'd be losing almost $200. Or sorry, I'd be losing $200 on that trade. What would I be making on my Beyond Meat. From 61, it went to 56. That's roughly $500. So I'd be 300 bucks in the positive. Instead of just $20 here, I'd have a profit of $300. And that's the leverage of the options. With a lot of the CFDs being outlawed, options have pretty much become the only leveraged vessel in the United States for people to make money with leverage. After 2008 and that stock market crash, the CFTC has came out and they said, hey, we're no longer allowed to do this. Too many retail investors got screwed. And as a result, we're going to be pulling back some of these things. You can't trade certain vessels anymore. So pretty much the only thing that's leveraged that's left, that's somewhat safe, if you know what you're doing, is the options market. And that's what I will be focusing on moving forward. I'll be taking more and more trades in that. It's just things from here get a little bit more exciting. What I wanted to do is show you that you have to have a bias on a one company and a bias on a different company in order to make money from it. Anyhow, here's another ACN 401 down to this would have been if I had taken a trade on that, this would be minus 5,000 bucks right now. And this one here would be plus 3,000. So in an option scenario, I'd be losing money on this trade. But one of the problems with options trading is that you expose yourself to a lot more to a lot more leverage, like we said. Primary example of that is sitting right in front of you right now. If we had taken this as a long and short trade, option trade, currently this one here would be losing close to $6,000. It's gone down 60 points times 100 at 6,000 bucks. This one here, we'd be making a little bit of money because we're betting to go short on it, but we'll only be making almost $3,000. So this would be a net loss of 3,000 bucks. By going long and short and staying flat, I've managed to scrape up in 44 days, $45 profit here, 46 bucks. Now, this is a losing trade if this was an option, granted. But then we go through the rest of them. Not every trade is going to work out. So far we're losing 3,000 bucks, right? And then we look at this one here. This one, the long stayed pretty much the same. I'd be losing like $50 on this option. This one here would be making about 500 bucks. So that's a $450 profit right there. EVA CRISPR, $600 loss here, and almost a $2,000 profit here. Okay, so this is a net profit. We go to Abbott Lulu, $1,000 loss here, and then we have a $4,000 profit here. So that's a $3,000 profit there. Invitation Homes against Rivian Automotive, $100 loss, and over here about $1,700 profit. And this is only 11 days old, so we're looking at 1,000 bucks versus 155. This is a very nice trade, and I mean I only enter option trades when the volatility is there and the prices line up and everything is perfect and I see a nice return and it makes sense. Otherwise, I'd rather stay flat and make in 11 days 155 bucks. It's not bad. It's more of a protection. It doesn't move as fast, so you don't have to lose sleep over it. When you have many option trades open at the same time, you'll end up sleeping and waking up in the middle of the night and just you can't check on it. Nothing changes at night, but you'll lose sleep over it, is what I'm trying to say. So thread carefully. Don't just jump into options and pretend like everything is going to be fine. It won't be. BWA bind. So Borg Warner Beyond Meat. We started off with 40. So this is about $200 profit. Sorry, loss on the long side. And then on the short side, I have a $500 profit. So I'm net long. Sorry, my current profit is going to be about 300 bucks on this. And so why are these so off? Remember, the beginning of the last month when we entered this, as I said, a lot of these trades weren't timed properly, like ACN and Abbott. I just entered them and then I left whatever looked the best and had the best chance of bounce back after that big drawdown that I've experienced. Let's just go back to that and I'll show you exactly what happened if you haven't seen that. We started off, we had a nice profit on the first day. It was like $200. And I went up to like $18,401. And then I had this big drawdown here because I didn't time these trades. I didn't look at the technicals for the final thing, and I didn't look for that ideal pullback. Whereas now I'm starting to only look for that after the fundamentals, obviously, but I'm not going to enter a trade until I see that, yes, technically speaking, this is showing me that there's going to be a lot of people coming in, joining a bandwagon, and going in with me at the same time. And that's a lot of the technical people out there. A lot of the institutions will do the same. They do follow technicals as well. They don't base their decisions on that, but they filter for entry with it. And so as long as you filter for entry, the entries should be a lot better. And I shouldn't have a $3,000 drawdown on one of these or another like this ACN. It's gone down a lot with the market. This was bad timing. Like if I had looked at the chart, I was actually like my stochastic was in the overbought, which I should never do. You should never buy something when it's overbought already. It's picked up the momentum. You never know. You could be right at the tip and then it goes down and you lose all that potential. So that trade shouldn't have been entered probably until right about now. But no harm done. I'm positive $45. I still scraped it up because thanks to the ratio trading. Like as long as you take one long and one short, chances are your short is gonna offset your losses on the other one, which is exactly what it's doing. I'm still profitable, even though we pulled back 10% on the Accenture, 15% here, sorry. I'm still making money because they're both pulling back thanks to the market pulling back. And when the market recovers, these two are going to recover. Once again, we're looking for the difference between two growing, which is this. And as long as that happens, you stay profitable. By taking options, I'm just taking on a little bit more risk. Um, yes and no, I'm risking less, but you risk that money a lot quicker. So I'm risking $450, which I could lose like within a day if it moves against me by $5. If the price all of a sudden, this is a strike of 125, if the price moves down to 120, my short is going to be worth more money, which means I'm going to have to actually, or less money, it's going to work against me because now I'm going to have to pay somebody to get it back. Because I sold it to them and I'm going to have to buy it back at a shitty price. Whereas my long is going to fall and it's going to be worthless. And so, but the maximum I can lose on this trade is 448. But I can lose that really quickly. I'm risking a lot more on the long and short portfolio where my risk here essentially is like $1,700 versus almost 500. But this is not going to disappear on me really quickly. This is going to dwindle away a lot slower. So I don't have to panic. When we have big move in the market, that's when options jump and they just pop. And then all of a sudden you wake up one day, you log in on your computer, the market opens up and oh man, it's Christmas, right? It can also work against you and you can quickly lose the premium on that very, very quickly. You can use that within a day. Whereas if you go long and short, it takes some time for you to get out of the trade before you lose all of it, which is $1,700 versus 500. So what's more risky? Because of all the leverage, the options themselves happen to be riskier, but because of the security of going long and short a stock, I believe that even though you're risking more by going long short equity, you are still safer because the big moves are just not likely as they are with the options. That is why I'm slowly easing into the options market. I'm not basing my whole portfolio on it. I wanted to show you, first of all, that yes, doing it this way, it works. And this is your first step. You have to have a bias on these stocks. You can't just go in and enter a bunch of option trades. See, I have an Abbott bias to buy it. I really like the company. I like the amount of times they report. And we were through that actually, and then I kind of abandoned that page. Let's go back for a moment. Let's go back to Abbott Laboratories. No, that's not it. Abbott. Where is my Abbott? Mhm. Where is it? Did I close it? I did. Anyway, let's find it again. So my link for that is in here. I just click on that and it should pop up. Voila. See, there it is. There's the old Abbott. If we go to the newsroom on Abbott, why am I taking a long trade in options if it's so volatile? Am I not afraid? Well, if you look at their press releases, first of all, you'll notice that this company publishes information all the time. This is a this is a management of a company that's very communicative. They're telling you exactly what's going on. They've outdone their fourth quarter sales growth. They're doing great. I've been expecting this because of their financials. Somebody that has great financials is always going to outperform, and that's pretty self-explanatory. The earnings per share come in higher than what was expected, and that moves it up. Sometimes it's priced in before, sometimes it's priced in after the earnings. Overall, I know that this company reports information on a constant basis. This is somebody that's not like a fly-by-night guy, like somebody that's gonna show a little bit of information and then make it all disappear or not communicate at all. A company that doesn't communicate is a company in trouble. They're hiding something, first of all. A company that keeps on updating its investors and they're always in the media showing that something is happening is a good company. It's a well managed company that have nothing to fear because they have nothing to hide. And if they're not hiding anything, that's because they're doing good business. And if they're doing good business, then this is something you want to invest in. Now, if a company has the last report or the last news thing was in like October, well, what happened for the last 3 months? If they're not showing you their numbers, if they're not updating their investors on what's going on, then they might be having a fundamental issue within the company. Just like Purple Innovation, which we spoke of last time. All of a sudden they go dead. Like what happened? They had a major accident, and that is why I'm still looking for that bottom on that company because it's a very good company. But all of a sudden they went quiet. They had a death on the production line. Somebody actually died. They got pulled into the machine or something like that, and they had to reinvent their manufacturing process just to make sure this never happens again. And I get it. Great company, had some hardships, and I'm waiting for it to come back and bounce off of. I believe that was a 4.7. Currently, it's like at $7.50. I am not gonna buy that until it goes to the very bottom of where it ever has been, which is like a 4 point something, 4.7, and that's right, exactly where I entered my trade. I've been through that last week. I'm not gonna show you again. If you want to go back to that, uh, what I would suggest is go to the left corner. Mm, there. And you'll find in that corner you'll find a list. It's a playlist of all the videos in this series. Watch it from the beginning. Don't forget to subscribe to this. This is a lot of information, and I know like it seems like a bunch of gibberish right now, but the more you listen to me, the more you understand. I am not anybody that's been speaking publicly before, so it takes time to convene what I'm trying to say, and some people have a hard time understanding. But if you go back to that playlist and just watch the videos from the beginning, you'll see you'll see what I'm trying to show you here. Okay? Something that works, something that's been tested, and something that a lot of the guys in the big institutions and the banks use. This is exactly the process they go through, and this is profitable. They don't teach this to just about anybody. You got to pick this up from somebody who's been in the industry, which is what I've done, and I'm more than grateful to that person. His picture is on my wall in the office, and I pretty much worship the guy. I will not get into who that is. Maybe in the future, stick around and I'll tell you exactly where to go for the education, which is not cheap. But there's that for now. So why did I choose Abbott? Lots of communication, lots of good things. They constantly have good products coming in. They're constantly acquiring other companies who have some great products, which these guys want to end up marketing. And yeah, just an overall great company, and currently being fueled by this rapid testing, which everybody's doing. Everybody's buying these things up. You can't find them anywhere because they're sold out. And somebody that is doing that business in this time and age is going to do well. So that's what I'm hoping for. I'm hoping for this price to go to 150 within the next month, which would be a nice $2,000 profit, and that would make me very happy. So there's that. I think that's enough for today. Let's maybe not yet. Let's quickly go through a summary. We're currently at an unrealized P&L of 385. If we look at since January 12, where I started tracking the change in the S&P 500 in my portfolio, the S&P since January 12 has lost 6.34%, and I've scraped up 1.25% in that time. So I've more or less stayed flat. I scraped up a little bit of profit, but I am not in a minus like the S&P 500. If you were invested in the market, you'd be losing this much right now. And a lot of people have actually, because they've seen that much of a pullback in the S&P, a lot of people ended up closing their positions right about here. And that's like one of the biggest mistakes. If you are net long only S&P, your best chances to get in are obviously at the bottoms. You never want to get in right here. I'm not saying that it's a bad thing because it could rally from here and you could be in at a great time. But the best times to invest in the S&P 500 when you see a nice pullback. If there's a pullback of 20% and then it goes back up and starts going, that's when you get back in. You don't. I would never get into the S&P 500 at the highest of the highs because chances are you're gonna wipe out. So in order to hedge the S&P 500, you might take in an inverse ETF. Make sure you have some exposure to the downside just in case this does crash. And where it flips from net long to net short is right about here. The bear market is 20% pullback of the highest of the highs in the last business cycle, which is this year. And when that happens, I will be going net short. Okay, so why is my portfolio staying flat? Well, because I am net long and the market is going down. If my portfolio was net short, meaning I'm more exposed to the downside, I'd be making more money on the way down. Why am I staying flat? It's because I'm staying hedged and none of this craziness, this volatility, daily speeches and Russia false flags, none of this is gonna affect me really. This is gonna pretty much protect your capital. Okay, so long, short, portfolio trading is the way to go. And some options. Some people would disagree. Some people would say put all your money in the options, but I've done that before, and honestly speaking, I didn't like the volatility of it up and down every single day. I'm going to ease into slowly and try to pick my bottoms on these and then pick the peaks on my shorts. So let's quickly go through what happened. The 10 years at 1.78, we have a slight retractment, but overall, as you can tell, this slope is rising up. The yields pretty much stayed the same. They haven't moved much this week. USD Canadian, we have a nice growth. The US is obviously gaining some momentum now. Gold, you can see where the gold is at. It's had a nice fall there. Silver, similar thing. Copper, similar. And oil, obviously oil keeps on climbing. And you can see that at the pumps right now. The gas is so expensive. Well, this will go through the $100 and just wait to see what's going to happen then. This is where my portfolio is at. This is exactly what my portfolio looks like. Why do I do this? Or why do I put everything in here and to see it? Well, if I look at my platform, it has a bunch of pluses and minuses. And let me see if I can maybe drop in a video on top of this. So if I can, you should be seeing a different screen right now. I'll edit this afterwards. What's going to happen is that you're going to have a lot of longs and you're going to have a lot of shorts. And every day those numbers are going to change. It's all there. But how can I tell if, like a stock moves up and down throughout the week? How do I know if it's overall going up and overall going down? These measures are just not easily provided for you on the platforms. They give you the plus and the minus, but they don't give you like the week's change, the monthly change. And that's why I come into here and I want to find out exactly what's going on. How much has it changed today? How much has it changed over the week, the month, the quarter? This allows me to see the overall direction of the stock. Like you're not going to be able to see this, that, oh, we've lost 10%. this month because the S&P lost them. You're just gonna see this number here. You're not gonna see any of the history. Okay, so your broker doesn't publish this information on purpose. They don't want you to take their money. Okay, they want you to base decisions on something that they've given you for free, which a lot of times the flashy, colorful platforms that they publish for you are only there to smear some soap in your eyes so you don't pay attention to what really matters. And this is what matters. This here is what matters. Like you want to see the overall performance for the last 4 months. Is this going to be profitable 2 weeks from now? Or is this something I got in right here and it's going to keep going down? Sure, I got into here and this was a long, bad trade, but I had no idea the market's going to crash. I would have lost a lot more money if I didn't have this short, that's for sure. So by doing it this way, not only are you smarter than a broker because you have a safety net, two, you're not basing your decisions on something they're giving you so you could make bad decisions. I don't know if you understand that right now, but a lot of the information that they publish and a lot of the information that comes out in the media or all over social media platforms, it's all bogus. If you look at Bloomberg and they're pumping a company which has really bad financials, you look at their financials and they're falling apart. There's a lot of minuses. And then there's the CEO or financial officer coming out and he's saying like all these great things for this company. What if the financials are not there? If they're not communicating, there's no new products coming out. What's going to drive those returns? What's going to drive that price up? They're only doing it to save their own assets. What they're doing is they're hoping that enough people, enough dumb money people, as they call them, or the retail, that enough of them will see it to buy back what they're trying to sell you. And you'll be buying it at the highest price. Okay. And then the price was $130 last week. And then you follow up next week, like Novavax. They came out on TV and they talked about, oh man, we got so many great things coming out. They don't even have one approved shot. I don't want to say the word because I'll probably be banned from YouTube, but they don't have one shot which has been approved. Okay. And they're trying to bust into a market at the end of this pandemic. And what is that supposed to be making any sense? No, they're trying to save their own ass. Okay, they've bought with all this free stimuli. They've bought their stock. They've pumped the price up, and now they're going to do a pump and dump on you, which is exactly what Novavax did. I'll show you what I mean. NVAX, and I was watching this a couple of weeks ago. I was like even considering taking a trade in this. I'm like, I really don't like this company. I should take a trade. Did it go up one day? Yeah, it went up with the S&P 500, but you look at the bigger picture the last month. Look at that. It's a constant slide. Now, they were out on TV roughly right about here, okay? And then for a little bit of time, it looks like it's going up, and all these retail investors will be getting right here with the news. Never, ever follow the news, ever. Follow the fundamentals. Look at the financials. And in my future videos, we'll spend more time on that because that is the most important thing ever. When you go and listen to a CEO on TV, this is what ends up happening to you. If this was an option trade, this would have been a $5,000 loss at this point in time. Okay. If I had gone long and short, then depending on what my exposure was like, I don't know, I'd probably be losing $100. But the bottom line is by following the news and looking at what the brokers and what the people in the news are, which are pretty much advertising, what they're telling you, you're better off taking the opposite approach. If they're telling you that they're going to be doing great and their financials suck and they have no products coming out, and then now this guy's coming out on TV and he's pumping it, well, his company's paying for that advertisement. And guess what? They're going to do a pump and dump on you. Okay? So you're much better off selling it on that news. And then you would have lost for a couple of days. Like, oh man, I did a good thing. Look at what's going on overall. Are these guys going to make any money? Look at this. There's no steady growth. If I look for the last 5 years, what have they done? Literally, the only thing that make this stock up is like the chance of, oh wow, these guys can manufacture jabs, but they haven't published. Nothing came out. They don't have one that's out there that's approved, and they're telling you here that they're doing so great and they have this one product coming out. There's nothing. There's nothing coming out. Okay, nothing has approved by anybody, and they're telling you great things. Short it. Okay, And don't take my word for it, because if you don't go long on something else at the same time, then you'll be exposing yourself to too much risk just by going short. So make sure you follow the example. Go long and short on everything you do. Okay, long and short, long and short, long and short. Abbott call, I still don't have a short, but by the end of this week, I will. I'll look for that perfect one, perfect setup, and I will enter it in here. And we'll come back to this on Saturday next week. And I'll see. And then 2 weeks later, we'll see how it turns out. But for now, $54 on that one, which is phenomenal. I love it. Why is this not there? Okay, 54.40. Sorry, I'm looking in the wrong place. 54.40 option, and I've added that in here, right on the bottom. If you look, that it's the strike is 125. My strike for the short is 150. They both have an expiry date of March 18th. And the January 26th, which just happened, was the earnings, and they outperformed on these earnings. So guess what? Earnings happen to be a catalyst as well, and that's going to push the price up. Okay? So watch this number. If I lose on it, I lose on it. If I win on it, I win on it. As long as I have that short by next week, if stock market crashes, this is what's going to make money for me. If it rallies, then this one loses and this one makes money. It's the same principle as here, the stock P&L. Option P&L works pretty much the same way, except you get 100 to 1 leverage. Okay. With that, don't forget to subscribe. With that, I'd like to end this video. It's long enough. If you've sat through it all this time, thank you very much. I appreciate it. Pump this, share this with your friends. This is really good information being shared for free on YouTube, and I'm hoping to change some lives with this because this stuff works. And yeah, peace.